Welcome back, economic warriors, to Boss Economics World, your one-stop shop for exposing the madness, mismanagement, and outright clownery of the people who claim to run our economies. I'm your host, the guy who's been yelling into the void since 2008, and today, we've got a doozy of a story, the US and China's latest trade truce over rare earths, chips, and fentanyl. Spoiler alert, it's less of a truce and more of a circus, with Uncle Sam and Chairman Xi juggling flaming torches while the global economy teeters on a tightrope. So, grab your coffee, or something stronger, because we're diving headfirst into this economic dumpster fire. Let's start with the headlines, shall we? The US and China, after months of throwing economic punches, have apparently agreed to a preliminary plan to ease trade tensions. Cue the confetti, right? According to the suits in London, where negotiators spent 20 hours in a Georgian-era mansion near Buckingham Palace, probably sipping tea while the rest of us sweat over inflation, this deal is supposed to revive the flow of sensitive goods between the world's two largest economies. Think rare earth minerals, magnets, chips, and maybe even a sprinkle of fentanyl crackdowns to keep Trump happy. But hold your applause, folks, because this is less of a deal and more of a glorified press release. As U.S. Commerce Secretary Howard Lutnick put it, once the presidents approve it, we will then seek to implement it. Translation, we've got a framework for a framework, and the real work hasn't even started. Oh, and don't forget, this comes after a 90-day reprieve on tariffs that's already a third of the way done, with China's exports to the U.S. crashing 34% in May 2025, the worst drop since the COVID chaos of February 2020. So, while the negotiators pat themselves on the back, the global economy is still bleeding, and trust between the two superpowers is about as solid as a house of cards in a windstorm. Here's the kicker, folks, this isn't a solution, it's a band-aid on a gunshot wound, and the gun is still in the hands of the clowns running the show. But before we roast the government's mismanagement, let's peel back the layers of this economic onion and see what's really at stake. Now, let's get to the meat of the issue. This trade spat isn't just about tariffs or Trump's Twitter tantrums, it's about who controls the building blocks of the 21st century economy. Rare earth minerals, magnets, chips, these aren't just fancy buzzwords, they're the lifeblood of everything from electric vehicles to iPhones to laser-guided missiles. And guess who's holding most of the cards? Yep, China. They control about 80% of the global supply of rare earths, according to the U.S. Geological Survey's 2024 report, and they've been flexing that muscle like a bodybuilder on steroids. Here's the deal, back in May 2025, China started dragging its feet on rare earth exports, causing American companies to scream about looming magnet shortages. Was it deliberate sabotage, or just bureaucratic red tape? Who knows, but the U.S. didn't waste time crying foul. Trump, never one to miss a photo op, jumped on the phone with Xi Jinping, and the U.S. slapped export controls on chip design software, jet engine parts, chemicals, and nuclear materials. Tit for tat, baby. And now, in London, they're promising to roll back those restrictions, if China plays nice with the rare earths. Sounds like a hostage negotiation, not a trade deal. But let's zoom out, because this is bigger than just magnets. This is a full-blown economic Cold War, where access to critical tech gives you the upper hand. Remember the chip shortage of 2021-2023 that crippled car production and sent consumer electronics prices through the roof? Well, fast forward to 2025, and the stakes are even higher. According to a June 2025 report from the Semiconductor Industry Association, global chip demand is expected to grow by 12% annually through 2030, driven by AI, 5G, and electric vehicles. Meanwhile, the U.S. is still playing catch-up, with the CHIPS Act of 2022 promising $52 billion to boost domestic production, but most of those factories won't be online until 2027 at the earliest. China, on the other hand, is pouring billions into its own chip industry, aiming to be self-sufficient by 2030, per a 2024 analysis by McKinsey. So, what do we have here? A global economy held hostage by two superpowers playing chicken with the stuff that powers our cars, phones, and fighter jets. And who's paying the price? You, me, and every business caught in the crossfire. But wait, it gets worse, because the real villain here isn't China or even Trump. It's the government mismanagement on both sides that got us into this mess in the first place. Let's talk about the elephant in the room. None of this had to happen. The US-China trade war, the rare earth crisis, the chip shortages, all of it is the result of decades of government incompetence, short-sighted policies, and a complete failure to plan for the future. And now, we're all stuck cleaning up the mess. First, let's look at the US. Back in the 1980s, America was a leader in rare earth production, with mines like Mountain Pass in California supplying the world. But then, in the name of free markets and globalization, the US government let those industries wither, outsourcing production to China, where labor was cheap and environmental regulations were lax. By 2024, the US was importing 74% of its rare earths from China, according to the US Department of Commerce. And now, when China flexes its muscle, the US is scrambling to rebuild an industry it willingly gave away. The Defense Department has poured $200 million into restarting Mountain Pass, but as of June 2025, it's still only producing a fraction of what's needed. Talk about closing the barn door after the horse has bolted. Meanwhile, China's government isn't exactly a model of foresight either. Sure, they've cornered the rare earth market, but their export controls and bureaucratic delays are backfiring. European carmakers, who rely on Chinese magnets for electric vehicles, are now diversifying their supply chains, with companies like BMW and Volkswagen investing in rare earth projects in Australia and Canada, according to a June 2025 report by Reuters. And let's not forget the fentanyl issue, Trump's pet project, which China has dragged its feet on, risking further tariffs and alienating allies. This isn't strategy, it's economic brinkmanship, and it's pushing the global economy to the edge. Here's the bottom line, folks. Both governments are playing a dangerous game, prioritizing political posturing over economic stability. And while they're busy flexing, the rest of us are stuck with higher prices, supply chain chaos, and the constant threat of recession. Speaking of which, let's talk numbers, because the data doesn't lie, even if politicians do. The US-China trade war has already cost the global economy dearly. According to a 2025 study by the International Monetary Fund, the ongoing trade tensions have shaved 0.8% off global GDP growth since 2018, with the effects compounding as the conflict drags on. China's exports to the US, as we mentioned, tanked 34% in May 2025, while US exports to China are down 15% year-over-year, per Bloomberg calculations. Small businesses, farmers, and manufacturers are getting crushed, with the National Federation of Independent Business reporting in June 2025 that 68% of U.S. small businesses cited rising costs and supply chain disruptions as their top concerns. And then there's inflation. Remember how central banks promised us transitory inflation back in 2021? Well, fast forward to 2025, and it's still here, fueled by supply chain bottlenecks and trade disruptions. The U.S. Consumer Price Index rose 5.2% year-over-year in May 2025, according to the Bureau of Labor Statistics, while the Eurozone hit 4.8%, per Eurostat. Meanwhile, the Federal Reserve is stuck between a rock and a hard place: raise interest rates too fast, and you risk a recession; keep them low, and inflation spirals out of control. Oh, and let's not forget the currency markets, where the US dollar has weakened against every major counterpart, as investors brace for more uncertainty. Financial markets, of course, are putting on a brave face. MSCI's All-Country Equity Index hit a record high on June 10, 2025, shrugging off the trade drama. But don't be fooled, this is a bubble waiting to pop. As Charu Chanana of Saxo Markets pointed out, markets will likely welcome the shift from confrontation to coordination, but the absence of further scheduled meetings signals that we're not out of the woods yet. Translation: one wrong move by Trump or Xi, and this house of cards comes crashing down. So, what's the takeaway, folks? The US and China might be patting themselves on the back for this framework, but the real story is the damage already done, and the damage yet to come. Governments on both sides have failed us, prioritizing political wins over economic stability, and now we're all paying the price. But hey, at least the negotiators got to enjoy some fancy tea in London while the rest of us brace for impact. Here's the deal, economic warriors: we can't rely on the clowns in Washington or Beijing to fix this mess. The US and China might eventually hammer out a deal, but it'll be too little, too late, and the damage to trust, supply chains, and global growth will take years to repair. So, what can you do? If you're an everyday person worried about your finances, diversify your investments, look into commodities like gold or even rare earth ETFs, which are poised to benefit from this chaos. If you're a finance pro, start stress testing your portfolios for a potential recession, because the warning signs are flashing red. And most importantly, hold these governments accountable. Demand transparency, demand long-term planning, and demand policies that prioritize economic stability over political theater. Because if we don't, the next trade war, or rare earth crisis, or chip shortage, will make this one look like a walk in the park. That's all for today, folks. If you're as fed up as I am with this economic clown show, smash that like button, subscribe, and ring the bell so you never miss an episode of Boss Economics World. And remember, the economy might be a mess, but at least we've got each other to call out the madness. Until next time, stay sharp, stay skeptical, and keep fighting the good fight.